right, thanks for joining us once again here on the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. On this week's edition of the Tech Corner, we're going to be covering Oracle Incorporated. Now, Oracle is a global leader in enterprise information technology solutions. The company is well renowned for its comprehensive suite of cloud-based and on-premise software offerings covering multiple enterprise segments. Oracle Fusion Cloud applications are used for enterprise resource planning, integrated applications, and infrastructure services, providing flexibility for diverse IT environments. The software and data solutions segments also cover areas like human capital management, supply chain management, as well as CRM, customer relations management. Oracle also provides robust infrastructure technologies such as database and server software and a wide range of middleware solutions as well. These services are designed to be rapidly deployable, cost-effective, and secure, catering to the needs of businesses, government agencies, as well as educational institutions worldwide. Oracle's base spans various industries, leveraging its technologies for diverse applications such as AI model training and enterprise data management. Now, when it comes to competition, the landscape is relatively robust. Mainstay competitors in the cloud space include Microsoft and Google. In the application software space, we have to consider other competitors like Salesforce, ServiceNow, and even Workday in the human capital management software space. Now, when it comes to unique value, Oracle's database remains deeply embedded in mission-critical enterprise systems, which can make migration slow and sticky for users, creating a durable competitive advantage and a sticky installed base. The company's strategic focus includes supporting the artificial intelligence ecosystem through AI-driven database solutions and cloud infrastructure, addressing the rising demand for efficient data management and computing power. And lastly, the company is going through an aggressive transformation that leverages its database core while enhancing its cloud and application products, supported by major AI cloud contracts and acquisitions. This positions Oracle as a growth stock with long-term potential. Now let's take a look at some most recent news in the last few months. First off, going back to September of last year, OpenAI said Oracle and SoftBank were expanding Stargate with 5 new sites, referencing a prior agreement to develop up to 4.5 gigawatts of additional computational capacity. The partnership potential is estimated to exceed over $300 billion for Oracle over the next 5 years. Going back to the latter part of 2025 in December, Oracle posted its fiscal year 2026 results. It reported cloud revenue up 34% year over year, and its remaining performance obligations jumped to a staggering $523 billion, up 438% year over year. This is a major catalyst headline for the stock narrative. Now, earlier this year in January, TikTok finalized a U.S. joint venture whereby Oracle was named a managing investor and a security partner. This finalized a deal creating a majority-owned American joint venture. And lastly, in February of this year, Oracle initiated a plan to raise up to $45 to $50 billion in 2026 to expand its cloud infrastructure capacity. Now let's take a look at some additional positive elements behind Oracle's business. First off, the company is well positioned to join tech giants due to its commercial enterprise and government ties to rapid AI platform growth, offering high margins and strong free cash flow potential for years to come. Earnings revisions for Oracle are optimistic. For instance, there are 37 upward revisions on an EPS front and 0 downward revisions by analysts in the last 3 months. This indicates positive analyst sentiment regarding Oracle's future performance. The company also exhibits robust growth metrics. For example, if you look at its forward 4-quarter revenue and EBITDA growth estimates, these numbers are nearly double the 5-year averages. Yet the earnings multiple of around 21.5 times earnings is nearly equivalent to its 5-year average. This suggests the stock, even though it's fallen quite a bit over the last year, may be trading at a discount to its future earnings growth. Profitability for the business also remains impressive when you compare it to its historical averages. For example, its net income margin over the last 4 quarters is nearly 26% of sales, while the sector median lies at around 6%, and the 5-year average is nearly 22%. And lastly, Oracle's recent $25 billion bond sale was met with record demand, alleviating these funding concerns for its $500 billion remaining performance obligation backlog, $300 billion of which is tied to OpenAI. Now, despite many of these positives to consider with Oracle, there are also concerns we have to address. Now, while profitability is impressive, valuation challenges and mixed momentum warrant caution. Oracle's significant debt burden and negative free cash flow is exacerbated by heavy CapEx and AI investments. This raises concerns about financial sustainability and liquidity. The company's reliance on a small number of large AI contracts, such as with OpenAI, poses concentration risks and may impact long-term profitability if demand shifts. Being indexed so heavily into one AI model company, this is also one of the most significant execution risks that Oracle has now been made to bear. This potentially can cause rising skepticism about AI-related returns and thin margins going forward, along with potential obsolescence of GPU investments, which may contribute to a bearish outlook for Oracle stock. Much of the business economics depends on data centers actually being built and powered, and OpenAI's evolving multi-provider strategy. OpenAI has also, by the way, struck a very large cloud deal with Amazon Web Services and is no longer exclusive to Microsoft and Oracle, which underscores that Oracle is in a giant competitive mix. Now let's take a look at the technical picture for Oracle. First off, the annual trend in Oracle has been weak, with one-year returns down about 9.5% relative to the S&P 500, which is actually higher by 14%. Year-to-date returns are also very poor, down about 18%, falling in sympathy with other application software names as of late. The near-term bearish trend is also indicated with price below a downward sloping 20 and 50-day moving average. And the stock has underperformed the broad market over the last 60 trading days, again, when compared to the S&P 500. Despite this negative downtrend, upside momentum as measured by the weekly RSI indicator is positive. It's trading slightly above 30 and beginning to strengthen while divergent relative to the weekly stock price. The same positive divergence is shown using the weekly MACD indicator, suggesting a possible inflection point in price coming up. Now, more importantly, over the long run, the stock is now trading slightly above a rising 200-week moving average. This suggests it's in a nested position above a long-term means of rising support. And lastly, we got to keep in mind, if Oracle falls below this 200-week moving average, which is an important support level, it could trigger additional selling, driving the price closer to its April 2025 lows of approximately $120 a share. Now, in summary, let's think about this contextually. The forest fire that has engulfed software stocks as of late could very well prove to be at a long-term bottom, as weeks of intense selling have derated the software premium to levels not seen in recent years. Oracle has not been immune to this selling pressure, yet Oracle remains a leader in leveraging artificial intelligence secular trends. The company's growth strategy is supported by substantial investments in research and development, ensuring continuous innovation in its product offerings. We must remember also that Oracle has a massive potential driver via the OpenAI partnership exceeding $300 billion over the next 5 years. Now, despite negative free cash flow prospects through 2029 and a leveraged balance sheet due to debt, Oracle's AI infrastructure build-out and integrated portfolio remain key growth drivers. With key strategic partnerships and sales initiatives focused on expanding its reach and integrating its platforms into various industries worldwide, the company is well positioned to join other tech giants due to its rapid AI growth platform. This could potentially offer high margins and strong free cash flow growth over the next years to come. All right, that's it for this week's edition of the Tech Corner. Please don't forget to like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you here next week.